All right, everyone, we're excited to be here with you today and talk about building a modern card program. We have a great presentation for you, whether you have a card program today, you're looking to launch one, considering how to make customers more loyal. We've got content for you. So strap in, stay tuned, and we'll get going. First up, just a couple of housekeeping notes for everyone to be aware of. Well, importantly, who's talking to you today? Of course. So I'm Meredith Luera. I lead product marketing at Alviere, and I will be your MC for much of this presentation. I will allow my colleagues Carter and Josh to introduce themselves.
Hi everyone, I'm Carter Chandler. I'm the Vice President of Customer Implementation at Alviere. And that encompasses three important pieces. The first of which is sales engineering and solution architecture, so crafting the right solutions for the right programs, and then implementation project management. So bringing that vision to life. And then the third piece of it is customer care. So how do we maintain a successful program long term?
Thanks, Carter. And I'm Josh. Pleasure to be here. I'm Director of Strategy here at Alviere and work closely with our clients and prospects to build out what these solutions look like from a financial perspective, aligning on key goals and making sure that we have the right plan in place to go execute when we bring these products to market. So happy to be here and looking forward to the rest of the presentation.
Awesome. Thanks, Carter. Thanks, Josh. Just a couple housekeeping notes for you to be aware of. We'll run about 45 minutes here. This recording is going to be sent out to everyone. So don't worry if you don't take copious notes. We're here afterward to make sure you have what you need. And of course, you see our contact information on the screen, and we'll provide other ways to get in touch later in the presentation. So no need to be a stranger. We're here to answer questions as well. With that in mind, I will hand it over to Josh just to set a bit of context for us. Excuse me. Agenda first. First, we will dive into some card programs we know and love. Importantly, especially for those of you who have card programs yourselves, who are running them for your own brands, we want to make sure we're providing some contextual relevant examples. And then, of course, how do you go about building a program? If you're starting from scratch, if you're looking to modernize the tech stack you have today, how do you go about it? What do you need to consider? And that's what Carter and Josh will really spend the bulk of the time taking us through. And then as time allows, we'll break down how some of those popular card programs we talked about can go through that exercise of configuring and creating the program that's ideal for them. And afterwards, we'll take a bit of Q&A for any that come up. All right, Josh, back to you.
Thanks, Meredith. So let's set some context for card programs and what we're going to talk about today. So thinking about card programs and really where they fit into business ecosystems, we think about it in two different buckets. The first being optimizing an existing process. So taking some sort of money flow that exists today and leveraging a card program to do one of a couple things, whether it be improving the economics of that process, enhancing the experience for whoever's within that flow of funds, or providing optionality to employees or customers to get a new modern way to use the funds that are being distributed. The other way we think about it is launching a new product. So it's whether we're offering a differentiated value proposition to customers, or we're trying to increase customer lifetime value by creating new touch points and more meaningful touch points with those customers. We're thinking about launching new products to use that card program to drive something in the core business, whether it be leveraging some of the economics that we get or the revenue that we get from these programs to drive certain initiatives within the business. We're thinking about new products and card programs as a new product, as an ancillary way to deliver differentiated value to your customers. And so card programs operate in a variety of different ways. And there are a lot of different types of card programs. So let's talk about what those are, and then we can go into a couple of examples. So at first, we talk about promotional cards. That's where you as a business can give your customers money on a card to upsell them or drive new acquisitions or things of that nature. We also have closed loop loyalty, where the money can only be spent kind of in your ecosystem, as opposed to open loop cards, where they can be spent really across the board. And then disbursements. So talking about dispersing funds either to employees or to consumers as reimbursements, for example, on insurance claims. And there are a lot of prevalent use cases within these four different buckets that we all know in the market. And so let's start with an example of promotional cards. Dish Network offers a promotional card to incentivize new customer signups. They say, if you sign up for services, I will send you a gift card that has X amount of money on it for you to spend anywhere, as a way to drive a behavior that enhances their core business, which is customer acquisition. On the closed loop side, we think about Starbucks, and they are driving additional transactions and repeat visits by having you load a prepaid closed loop card to continue purchasing from Starbucks. Walgreens is on the other side, where they have an open loop card to provide financial well-being. It aligns with kind of what their core business is of well-being and promotes foot traffic and additional functionality and features and benefits that that consumers can get for going into Walgreens stores. And then thinking about disbursements, Uber uses it to pay out their drivers. So their drivers can get paid out faster and also get unique benefits that relate to the work that they're doing while driving for Uber. And so across all of these programs, these companies have used card programs to provide additional value, streamline existing processes, and or deliver value to customers in a way that means the most under their brand. So with that, I'll pass it over to Carter to talk a little bit about where you start in terms of building these card programs.
Great. Thank you, Josh. And so once you have that vision for a card program and have an understanding of how it can, really enhance your business, then the work becomes, how do we set this up? And how do we do it in a way that ensures that the product that you ultimately take to the market is the right one? And the first thing that you have to consider are all the components that go into a successful card program. This list here is a small list. There are more of the components here, but these are sort of the key ones. And it's really important from the get-go to ensure that the partner you're working with brings these components to the table and does the work to set them up, work alongside you to make sure that they are configured the right way, and that they are scalable and innovative in the future. Now, I'll touch on each of these briefly. First and foremost, the technology itself, right? It has to be modular and scalable in such a way that allows you to potentially start with a core product and then add features or adjust features as the program scales. So that's one of the first key pieces of it. The second piece is the card issuing bank partner. It's critical to work with somebody who brings the right bank with them, that understands the market, that understands programs like the ones you're trying to stand up, and works with the partner in a way that you don't have to necessarily be involved in that relationship. The third piece of it, obviously, is the cards themselves. And there's a lot of consideration into the branding of the cards, the type of cards, and we'll talk about that in a slide or two. What is the proper delivery mechanism to the of the cards to your consumers, with an eye towards, is a virtual card the right one based on your customers? Is a physical card right? How, if it's physical cards, how do you ship them out? As mobile wallets make sense for this use case? And so all of those are very important. And that leads into the UI and UX aspect of it. So working with a partner that brings the expertise in customer onboarding and user interface development on the technical side of things. And then, I mentioned the customer care aspect of it, but designing a customer care framework from, no or low touch tier 1 all the way through tier 2 and card services. And then last but not least, certainly not least, maybe arguably the most important, is the regulatory framework. So working with a partner that brings that full compliance framework and expertise to ensure that that component is built correctly for the program, because you certainly don't want to under index on the compliance and get yourselves into trouble. But on the other side of the coin, it's just as important to not over-index on your compliance and kind of work yourselves into an inefficient customer experience that's really not needed.
Yeah, great point,
Carter,
Carter. Go ahead, Josh.
I think these are really important as people think about modernizing an existing program or launching or leveraging a new program. Because these are the nuts and bolts or the foundational pillars of what the product is that your customers or employees will end up feeling. And so there's a lot of thought that has to go into making this fit for what the program is trying to achieve, and then understanding what levers are available through these to ultimately provide the right product in market. And I think next you can maybe dive into some of the levers that are available for clients to work through as they're going through these programs.
Absolutely. That's a perfect segue into, you know, once you have the right components, it is about configuring them to operate the way you need them to again, like to your point, Josh, to ensure that the product you ultimately take to market is the right one. And these are just a few examples of those levers that you should work with your partner to define and ultimately set up. The first of which is the spending controls. And so Josh mentioned closed loop versus open loop. That's definitely an important one to understand and define. You know, where can the funds be spent? How? When? Is it specific, closed loop and limited to a specific merchant or set of merchants or categories of merchants? Or is it open loop and can be, used essentially anywhere? The next one to consider is really what rewards and incentives, if any, are tied to the card. So things like cash back at specific merchants or tied into your existing loyalty and rewards programs or points programs. And then taking all of that and determining, does it make sense to have these spending controls at the program level or at the individual card level, or kind of a mix of both, which is all possible. The next piece of this is what we refer to as the flow of funds, which is, the capital requirements and the treasury management aspect of a card program. There's the typical, your card is swiped and, the money gets spent. But there's also flexible things that can be considered based on the requirements of a program, like just-in-time funding, wherein, if the requirements of the program allow for it, limiting your capital outlay or requirements to just enough to cover spending for X number of business days, which allows you to then keep breakage and things like that. So a lot of benefits to be had by really analyzing the treasury management aspect of a card program.
Hey, Carter, you mentioned
Yeah.
if your program qualifies for it. Can you give us an example of a program that might qualify for just-in-time funding?
Yeah, absolutely. The promotional gift card examples that we talked about just now are great examples of that. So those typically fall into a regulatory framework that allow for just-in-time funding because it's either a closed loop ecosystem specific to certain merchants, or it's promotional in nature and the funds come from your company specifically.
Cool, thanks.
Yeah. And then the end user delivery experience, again, this goes hand in hand with the previous slide, where we, configure the cards themselves to be physical or virtual or a combination of the two, but then take it a step further and start thinking about, how long the cards are active, how, if they require pins, how did the card holders set their pins, what actions and levers are available to either your customer care folks or the card holders themselves to do things like lock the card if they suspect something's going on, or get it shipped to a different address, or replace it if it got lost or stolen. Those kinds of things are all things that you need to outline in your ultimate solution. And again, to Josh's point, that speaks to how your customers touch, feel, experience the product. And
Yeah,
then again, oh, sorry, go ahead, Meredith.
no, it's okay. I was just thinking about that. One of the things that's up here is the customer experience, right? And I know we'll have a lot of kind of loyalty brand marketing people who are part of this. And I think that's critical, right? What experience do you really want to create for the customers? These could be delivered via a text message, via an email, it could be in person. So there's a lot of different levers available to really create that experience you want. And again, driving to those business outcomes that you're trying to get to, whether it's that retention play, acquisition, or ultimately it could be cost savings from a provider you're using now.
Yeah, absolutely. And that leads kind of to one of the big key takeaways here is that these configurations, these levers can't be necessarily set in stone either. You need to really consider, the ability to, once you launch, and we'll have a slide on sort of launch and beyond, but ensuring that as you measure and learn from the scale of the program, being able to tweak these kinds of things. You could learn that, hey, we thought that a physical card made the most sense, but actually there's a really significant portion of our customer base that could benefit from a virtual only offering, and having the ability to add and adjust those things while not upsetting that often fragile relationship that you have with your customer.
Right. Yeah. Great.
And then again, last but certainly not least is the regulatory framework. And once you define that component, ensuring that the right pieces are set up. And that's where, again, it's critical to work with somebody who brings that expertise with them, to set these things and test them and make sure that everything's working as it should before launch, so that when you get to launch, that, if a fraud event takes place, and let's be honest, fraud is a fact of life in this world, that it's operationalized appropriately to respond to it in the right way.
Hey, Carter, I see the letters KYC/B on here. What do those mean?
Know your customer and or know your business, and that's regulatory terms for ensuring that your customers are who they say they are. And that's a fraud mitigation requirement. And again, that goes back to the components piece of it, in bringing the expertise to understand what are the right know your customer requirements or know your business requirements for that program. Things like what personally identifiable information should you collect? Are you required to collect? And then what checks do you run against those individuals or those entities, to, again, verify them in an efficient way while mitigating your risk?
Thank you.
And then once you have sort of those pieces, one of the threads that runs throughout all of this is what we refer to as the solution architecture itself. So taking all of these things and building a cohesive solution, that, again, ensures that what you're building is what you intend to take to market, and almost more importantly, ensure alignment across all of the stakeholders, whether it's your stakeholders, your partners' stakeholders, the end cardholders themselves, but making sure, again, that everything is documented, aligned, and the right thing is built. And so at Alviere, we take an approach where we document all of this throughout the solutioning phase, to define sort of three primary buckets. One are all the technical requirements. That's very important for your product people, for your dev resources to understand, what are the API endpoints that we'll have to utilize, or, what SDK capabilities do you have, or Bootstrap app capabilities do you have to ease our technical integration and dev lift burdens, and then marry that with the financial aspects of it. So when a certain action happens, that that everybody understands that means money is going to go from this point to this point. And then last but not least, certainly, is how all of that then interfaces with the end user. Again, so that we always keep in mind the touch, the feel, the product in the cardholder's hands. And then what we do at Alviere is, again, we document all of this. So we put together integration guides and UX UI guides that are specific to the program that, again, ensure alignment across all of the stakeholders and serve as a living document through the life of the program to make sure that, again, that the right product is built and delivered to the market.
Yeah, one of the questions that we commonly get when talking to prospects is, okay, we have the vision of what we want to launch in the market, and we kind of understand what we need, but now we fully understand and we're aligned on the solution. And by solution, as kind of you picked up from Carter's past couple of slides, is not only technical, but it's what are the compliance and regulatory frameworks that we need to operate in from a structural standpoint, and then what do we need to do on a day-to-day basis to maintain those? But then the question is, what does that mean for my business? What does it mean for my customers? And what is the impact that I can project or at least strive to achieve from a financial perspective? And so we work closely with our prospects and clients to build that in tandem. And all models start with customers. And so what is the customer acquisition? And it's essentially building the foundation for the business plan over the life of the program. And so we start way back in the beginning with what is the product that we ultimately want to launch? And what is the value proposition that we're bringing to our customers or the end users? And then how are we going to acquire them? Are we going to acquire them through digital channels like email or text that Meredith touched on? Are we a retail business that is going to get people through in-person interactions? And then what product selection are those customers going to take? Are there different benefits for different tiers of cardholders or different services that they can interact with, whether it be within the card program or the brand itself, to get a differentiated experience? Based on those things, we talk through what a ramp period would be and really align it with what the marketing strategy is to take this product to market, while considering what the customer acquisition cost is. So we built out our customers. Over the next 5 years, we predict that this is the customer acquisition, this is how many we'll have, and then we have to figure out and layer on how will they behave. So taking a look at the solution architecture that Carter talked about, that considers all of the different components and touch points that an end cardholder can do. How much money is going to be loaded onto the card? How much will be spent? Where will it be spent? Will it be used at ATMs, to try to figure out what the activity is for all of the customers that we already built up? What will the transaction size be? And then really importantly, how will those things drive certain activities or initiatives that are core to your business and what you're trying to accomplish? And so we have the customers. We now have an understanding of what they'll do based upon all of the product configurations and components that we kind of built together. Lastly, we finish by adding on the final layer of commercials. That's not only commercials for you and what it'll cost to bring it to market, but it's also creating the go-to-market strategy. How are we pricing these services compared to like products in the market? And how are we pricing it in a way that will resonate with the customers we have today? What's really, really interesting about embedding card programs into an existing business is the cross-pollination effect that it can have on something that you're already trying to achieve. So whether it be through the revenue, like I talked about in the beginning, or additional touch points with those customers, you can use the card program as a tool to push forward customer acquisition, revenue, connection points, inherently driving customer lifetime value, and then layering sensitivity analysis on top of it to figure out what could this mean in kind of the best case, projected case, and low case for your business. And so all of this, like most financial models, ends up showing itself in a complicated, large, long and wide Excel sheet that builds out every single line item from customer acquisition through the activity for every month of this program. But really what we're focused on is what's the summary? How many customers are we going to adopt? Essentially meaning how many customers are we going to provide this additional value to? What is the revenue that I can expect from this and when? And then what are the expenses associated with adopting those customers and the activities that they perform? to result in profit. And that's what we care about. And then you can choose to use that profit in a variety of different ways. You can keep it and hold it for the bottom line from a financial perspective. We can give it back to customers to incentivize them to act in a way, whether it be spending more, or visiting more, or getting different benefits to align with the strategies that your business is trying to accomplish in the kind of next 6 to 24 months, and really figure out what the timeline is for all of these things.
Josh, this sounds complicated. If I have a hard time getting resources from my finance team to build a new business plan, how do you suggest, what's the best way to go about this?
It is complicated, and not all retail experts or automotive experts should be financial services experts. And we really think that the key here is in the partnership between kind of you and the provider to leverage everything you know about the customers and who we're offering this to and what the product is going to be in the market, and then layer on our knowledge of financial services to build this together. So Meredith's question was around the financial component, but really that kind of thought goes through this whole process where the partnership begins when we're thinking about the solution. And we expect most companies out there to come with a lofty idea and to say, we have this idea of how we're going to provide additional value, but we need help. We need help with the components. We need help with the configuration. We need help operationalizing some of the compliance pieces. And we also need help building the business case. And when you bring in the expertise of the core business and the knowledge and foundational understanding of who the customers are and what they're looking for, and then can layer on the financial services expertise of how card programs are built and how they ramp and what the impact is, that's really where we see a lot of value coming out of this process. So no, it's not something that you have to do alone, but it's something that we really try to partner with so we're aligned on the same expectations when we think about launch in the market.
Great.
Thanks, Josh. And I think that leads perfectly into, once everybody is in alignment on what the product is and what the value is to everybody within the ecosystem, and the thing is built, then it's time to launch and then measure and then learn and then iterate, right? And launch is a really important phase, obviously, but it's not one size fits all. You need to make sure that the launch plan that you design, and this is something that, companies might need help with, makes sense for that program. Is it a full bore market launch and that's what makes sense to your target market? Or is it a phased approach where you start with an MVP and maybe a friends and family kind of approach, and then you monitor that activity for a month and kind of tweak things and then go to a slightly larger launch and then iterate over that? And so that launch planning is critical. And then once it is launched, how do you then scale it? Throughout the implementation, you're working on that go-to-market planning, and then it's time to execute that and really scale the program. And again, it goes back to me mentioning having the flexibility in the platform and the product to make changes efficiently based on the things that you learn. And that goes really to the last bullet here. I'll jump a couple with the data and reporting. So you need to make sure that you have that real-time granular data, both at the lowest level and at a summary level, to learn from and make decisions and make adjustments as the program progresses. And then, the customer care and compliance piece are really the operationalization of what we've previously talked about in terms of how do you serve the customers when they have questions or they run into issues, be it with the card itself or the mobile app or any of those pieces, operationalizing the plan that everybody's already developed in an alignment on. And that goes doubly for compliance, because now the cards are out in the world, they're being used. And again, I mentioned fraud is a fact of life. So if you have the right plan in place and it's operationalized appropriately because you have the right partner with the right team and the right expertise, then when something does happen, that again, it's identified immediately and it's swiftly corrected.
Yeah, that's a great point, Carter. And I wanted
And then I
to,
think the next piece of it is, if we have time, Meredith, is maybe
yeah,
talking more about the applications.
yeah, absolutely. And I wanted to come back to briefly the data and the reporting you had mentioned, because when I think of that iterate stage, that learning and iterate stage, that is so critical. If you're noticing customers are having a hard time doing some level of sign up or hitting a certain roadblock, you need to know that right away and be able to correct it. And then work with a partner who through that, components and configuration stage has flexibility to shift things if you need to in order to make the program evolve as your business needs change. So there are always going to be ways you want to play with those levers going forward in the future.
Yeah, and I don't want to. That's absolutely right, and I don't want to, paint a picture of you're always reacting to something negative, right? Like you're
Good
going
point.
to be getting card spend activity, and very likely you have theories about your customers' behavior and where they're spending the money and when they're spending the money that are built into the model and the configurations and everything. But what if you find out, that actually they're spending it over here and not so much over here? That's a good thing, right? Like you're learning really valuable things. And again, being able to adjust the model or adjust the configurations based on positive activity in the market.
Yeah, great point. Josh, is there anything you want to add here before we go to popular applications?
I think Carter hit on it at the end, right? Like if we're thinking about launching a card program, it's all about how do you drive the core business, whether it be optimizing something or growing something, right? And leveraging the insights that we get here to spread through your organization as an additional decision-making input is really, really valuable in when thinking about how do you touch customers in value-added ways. And so the data and reporting is a key insight to leverage, whether it be in your marketing organization or your retention organization, to figure out a little bit more in a real-time way what your customers are thinking and then how you can serve them in better, more efficient ways.
Great. Awesome. Well, we're getting close to the end, but what we wanted to do is really take what Carter and Josh went through about the theory of how to build this program and show you how some of those components, configurations, modeling considerations come into play when it comes to those applications we talked about at the beginning, including promotional cards, closed and open loop loyalty, and disbursements. So we'll touch on this briefly just to make sure you understand how it comes into context. But we'll also, of course, share these slides. So you could always look and see if there's a piece of detail in here you want to take back or have questions about. We're happy to field that as well. So the first is with promotional cards. So those are those, gift cards that might be incentivizing a new customer to become part of your brand. Could be something that's being issued in a store. One of the key considerations here is whether it's open or closed loop. That's going to have implications related to those know your customer requirements that Carter had brought up earlier from a regulatory standpoint. When it comes to closed loop cards, there's different considerations. If the money isn't being spent at a broad range of merchants, the overall know your customer or KYC process is a bit different from funds that can be spent, anywhere a credit card is accepted. Again, whether there's going to be virtual or physical cards, also a big consideration, and you could have both as well. Partner considerations to keep in mind here. Is it going to be fully branded? And by that we mean, is your brand going to be the center of the customer journey the whole way through? And that's actually a theme for all of these, I would say, not only here on promotional cards. There are some types of card programs. I think of a classic co-branded credit card where you often see a bank as the co-brand that's on the card. There are now options with embedded finance where your brand or your company remains the hero versus having to have a customer log into a bank portal or use their URL throughout the experience. So you want to have in mind what do you want to have for your experience, and ultimately who's a partner that can help bring that to life. And importantly, what can you expect as you're going through this? Well, for a promotional card, hopefully you can benefit from just-in-time funding. If it's a closed loop card, that could be, very well be an option that you're able to leverage. Not only closed loop cards, though, there are considerations for open loop as well. So again, these are things to have in your mind and make sure you know going in how you should potentially think about what to ask a potential provider in the way that a program gets built. Josh, Carter, do you want to add anything here?
I think, one thing that I failed to mention earlier on the card branding, and that's a really important topic, is not only can you have your brand, your company be front and center and the hero. I love that term. But also it could make sense to have your clients be the brand on the card and the hero to maybe their customers if it's, kind of a B2B scenario. And modern card programs should allow for that flexibility with dynamic branding, dynamic embossing, printing of cards, virtual, branding, those types of things are also a consideration.
Carter, can you share an example of when that would come into play? Can you think of a real life example?
Yeah, I mean, if you think about marketplaces, for example, and that could be a marketplace in any industry, whether it's, home goods or automotive dealerships or anything along those lines, where you might want to brand the card to that specific merchant or dealership or something like that, so that the cardholder knows that, it's tied to that brand, and maybe maybe it's a partnership where both brands are on there, or it's you're invisible to it. So that's kind of the typical use case, but the options are almost endless in that respect. And um, your provider should really come with the expertise to guide you on, networks have rules on branding and stuff like that to guide you to make sure that the branding falls within the right rules and have all that flexibility.
Yes, I know Carter has read the 170-page documents from the card network, so you don't have to. So we
I
always
just,
have that.
I wish they would stop releasing a new one every year.
Yes, keeps him on his toes. All right, great. So closed loop loyalty, and we'll probably wrap in the next couple minutes just to make sure we have time to get a couple questions in. So closed loop loyalty cards, Starbucks was the example we talked about for this. So customers might have a prepaid debit card, they can reload, they get rewarded for spending at stores or maybe their favorite coffee shop. Things to keep in mind here, closed loop, of course, that's part of this overall application that would come into play. Could be virtual, likely is. That's specific, of course, to an in-app experience. A lot of cards don't even make it into our physical wallets anymore. Some people only carry their cell phone when they're going out to lunch or going to run an errand. So that will depend on your customer base if that's, truly the right thing, but it very well may be in this use case. Rewards functionality, critical here, of course, making sure customers can have the ability to be rewarded for spending. And that doesn't mean it has to be always turned on day one. There could be the option to, have that lever there and add it back in if the time is deemed right, or to be able to shift it as well. I think that level of configuration is something important. We mentioned the tailoring by potential logos, right? In Carter's example of that marketplace, that could also happen here, where rewards can have some level of configuration too by that ultimate, business that's on there. And then just partner considerations to keep in mind here. Still a lot that we talked about. Processing and requiring, of course, that's important. That's part of the overall tech stack. And then one of the things that's really cool here, and Starbucks is a hero example for this overall use case, is capturing those deposits for future sales. So those are funds that enter the brand ecosystem and then are there. So that customer is coming back in the future and can really take advantage of that. All right, open loop loyalty. So open loop, again, that means money can be spent virtually anywhere a card is accepted. That might be connected to an in-app branded digital banking interface overall. So could be a full suite experience. They can still provide rewards in these cases. That's something really interesting. Walgreens in their program, they provide more rewards if you use the card to make purchases at Walgreens, but you can still get cash back even when you're spending that card at the grocery store or for gas or a non-Walgreens location. So they're still able to capture some of that customer spending data and see where else their customers are shopping. And they're rewarding them no matter what, just for using that card, and able to leverage the interchange they're earning on card spend in order to help fund some of those programs. Actually, that's worth defining a little bit because I don't know that we've talked about interchange too much. Josh, could you explain what interchange is?
Yeah, interchange is a fee that a merchant pays to be able to acquire funds, and it's usually used to cover any losses on the fraud side that issuers have to take care of. But what that means for you is for every single transaction on any of these card programs is revenue going back into the system because you are the issuer in this case. So for every $100 spent on a debit card, you might be getting $1.20 back that you can then use again to either keep as bottom line profit or put back into the ecosystem to drive various behaviors. That's one of the key revenue drivers when thinking about launching a card program.
Thanks, Josh. Great. And last but not least, disbursements. So the examples we had earlier really talked about these potentially going to employees or gig workers. If you think of employees who are on the front line, like those in retail, those in grocery, maybe those who are doing some kind of gig work with Uber or with Lyft, it is so critical for them to get paid as quickly as possible. We know the majority of Americans live paycheck to paycheck. They need access to their pay, and that's a big benefit in being able to keep employees around, is allowing them to get paid, for example, the same day that they do work. There's trends now of pay being even more immediate than that, and being at the forefront so your employees can have that type of benefit that really makes an impact on their day-to-day life is critical. So things to keep in mind here: are there any spending controls? One way that might come into play is if you're doing some type of disbursement for employee expenses, for example. Are we only, using that for certain types of locations, for example, or are there spend limits on there? KYC, another big consideration, of course, as we go back to that regulatory framework. Depending on the configuration, that's important to be keeping in mind how those overall funds are flowing. And then again, from a partner standpoint, how do you want your brand to show up? And does that partner support the way you're envisioning that customer journey to really come to life? And last but not least, what are some things that could be great outcomes in a disbursement program? Spending less on payout fees. That sounds great. Companies, especially large enterprises, spend a lot from a payroll perspective in order to get funds sent to their employees for every type of payout. There are ways to create an ecosystem that allows for quicker settlement, cheaper payouts overall, and cards can be part of that solution too. All right, we're going to move into Q&A. Josh, Carter, anything you want to be adding?
I'll wrap on something. So when we think about, I have an idea and a product or something that I think I can launch to provide additional value to my customers. There are a lot of considerations on the technical side, on the compliance side, on the financial side, and most importantly, on the customer experience side, which takes into account the very, very valuable brand that you've built. So when thinking about a partner, make sure that their vision is aligned with what yours is, and that their care for the brand and the end customer is seen throughout the entire process. So look for expertise in the technology space, in how we're building the program, in how the compliance structure is built, and how your partner is going to help you operationalize that and monitor all of the different components that we need to take care of, and then have the same vision that we're building towards from a financial perspective. So take all of those things into consideration as you think about finding a partner to help you deliver incremental value to customers or streamline an existing process. Definitely don't hesitate to reach out if you have any questions.
Great. Thanks, team. I've got one question here, and I think it's for Carter. So yes, heads up, it's for you. So one of the things you emphasize is the role of compliance throughout the launch process. We heard that was critical. I wanted to hear a little bit about the role they play in ongoing operations as well.
Yeah, absolutely. And that gets to, what I mentioned about operationalizing the regulatory framework of the program and having the right people with the right expertise in a partner that will do that continuous monitoring. So daily, minute by minute monitoring of transaction activity, having the right alerts in place so that if an event occurs, that it's taken care of quickly. But also even beyond that, in the reporting aspect of it, not only do you need data on card activity and consumer behavior, but also onboarding and customer acquisition. And is the KYC framework working as intended? Are we vetting the people the right way in the efficient way that we would hope? And so that's really that operationalized continuous monitoring of the program. And again, just like every other aspect of it, adjusting to the learnings.
Great. Okay, well, I think that's our time. We're just about at 45. Thank you, Carter and Josh, so much for joining us today. If there's any questions that we did not get to, please feel free to reach out to us. You'll have contact information for all three of us in the slides, as well as some helpful links that we're big fans of. And everyone will be getting a copy of our launch guide. That's helpful, no matter where you are in the process of outlining these key stages from a solutioning perspective that Carter went deep into, all the way through to post-launch so that you know what to be thinking about in modernizing your current program or launching a new one. All right, thanks again.
Bye.
Thank you.
Bye-bye.